read the news so that you don't have to. This one is giving 2007 energy. So Goldman Sachs CEO has just come out and basically said the credit cycle has not been cancelled. Translation for that? The party might be over, but a lot of people are still drunk. So here's the headline. Goldman's chief warns private credit risk show cycle has not been repealed. So quick context for those of you who are new here. Since the 2008 financial crisis, we've been living in quite a weird financial era. Interest rates, basically they've been on holiday, borrowing money has been cheap, and defaults have been low. So what's happened? Well, this whole industry exploded and it was called private credit. That's basically non-bank lenders giving out massive loans to companies, especially in tech. And because banks pulled back after the 2008 regulation, these private players stepped in and said, don't worry, we'll lend you money instead. Fast forward to today, this market is now worth trillions. You know where we are now. So what's Goldman rabbiting on about? Well, they are nervous because they're saying that the credit cycle, it never died, it just is sleeping. There's always the same cycle. Easy money, lots of lending, risk build up, things break. They're basically saying, don't get it twisted, gravity still exists. Also, as you know, private credit equals less regulation, more risk. Unlike the banks, these lenders don't have the same capital rules, they don't have the same scrutiny, and they can take, let's say, creative risks. And now even JP Morgan is pulling back from lending to these guys. That is not a good sign. And a lot of these loans are to software and tech companies, but there is rumors that AI is about to disrupt the entire business model. So imagine this, you've lent millions to a company. I do it all the time. And then AI makes that company irrelevant. Now, your loan, the money, kind of at risk. So what does this mean for investors? Well, that safe yield from private credit might not be so safe anymore. And for markets, if defaults start rising, that could spread fast because the market is huge and interconnected. And for the economy, less lending equals less growth. And if credit tightens too quickly, that's how downturns start. But it's not all doom and gloom. Of course, there are always people that can profit from a crisis. And that's what Goldman is saying. There is also big opportunities because government spending, AI is booming, and regulation is getting loosey-goosey. So we're in this weird moment where risk is rising, but so is opportunity. Not for us mere mortals, though. Basically, it means if you don't understand what you're invested in right now, you might be the exit liquidity. Welcome back to the credit cycle. It never really left, it just waited for everyone to forget.